Hello, credit union executives. Welcome to See You on the Show, where we give you up-to-date information on how you can reduce risk, keep key talent, and take a strategic approach to your personal financial wellness. Hosted by me, Doug English, a certified financial planner and former credit union insider with ACT Advisors. My guest on today's podcast is John Ballantyne, CEO at Tru Treasury. John has over 16 years of senior leadership experience in the financial services industry. And in this episode, we discuss how credit unions can benefit from treasury management services, how to navigate rate hikes, what credit unions can do to better serve the business members in their community. Hey, John, welcome to the show. We're delighted you're with us today to talk a little bit about treasury management. So before we do that, tell me about how you got started working with credit unions and what Tru Treasury does for the credit union movement.
Yeah, for sure. Hey, Doug, thanks for having me on today. Really excited to be here and talk a little bit about treasury management, what it means to credit unions, and a little bit about who Tru Treasury is. So myself, I am the CEO of Tru Treasury. I got involved in the credit union movement actually due to a headhunter reaching out to me. I'm a longtime commercial banker. I've been a fintech owner. I was reached out to because the credit union industry had a gap. They had a need for treasury management expertise in the credit union industry and funded a credit union service organization, or a QSO, to focus specifically on bringing treasury management expertise and capabilities into the credit union spectrum.
Your company is owned in a QSO structure, is that right?
Yep, Tru Treasury is a QSO structure. We're a unique QSO ownership structure. So for forward-thinking credit unions who are big into business services, who recognize a need for treasury management services in the credit union space, a technology company owns us because they saw the number of credit unions that were asking for treasury products like account analysis. And then where the technology company could provide it, they were asking, well, what do we do with it now? The commercialization. So obviously their focus is technology, not commercialization or the business strategy around treasury management. And then a league of credit unions is service organization is actually an owner as well, because they've seen the need across a massive footprint that they have of credit unions they speak to every day who said, we need better business services, better treasury management services in the credit union space.
Wonderful. Born of the credit union movement, here to serve the credit union movement. So that is a wonderful thing. I love to hear that. So what was the idea behind where you would focus first? And where are you making the biggest impact for credit unions?
And I think there's a little bit of history that you need to talk about with the credit union movement to understand the demand for treasury services. So if you go way back, I'm talking 30 years ago, 1998, field and membership rules changed within the Clinton administration, which really opened up credit unions to serve their communities. And within their communities, they had the opportunity to serve businesses more. Since that time frame is really interesting. If you look at a chart of growth of credit extended by credit unions to businesses, commercial credit, it's like the proverbial hockey stick. It's been growing. It's been an engine of growth for credit unions. Since that time, credit unions have said, hey, there's a lot of opportunity in this area. It's traditionally an area that's been owned by banks, and talent from the banks, relationship managers, have been entering into credit union world. So fast forward to present day, lots of relationships in the commercial spectrum between credit unions and the businesses in their communities, but there's been a challenge. And the challenge is businesses that have formed these relationships with the credit unions say, hey, we want to bring our whole operating relationship to your credit union. Basically, we want to move our services from our bank or whatever third-party fintech we're working with, and we want to consolidate with the credit union. The challenge was the credit union was lacking, first off, institutional knowledge of, hey, how do we structure deposit products, payable, receivable, fraud prevention, transaction products to best serve these members? And then how do we support it? It's a really expensive business case for credit unions. Recognizing that, my forward-thinking owner said, hey, we need to get this services, this treasury management business that banks have had cornered for the last 150 years plus, and have those capabilities in the credit union world that makes sense for credit unions to be able to deliver. And that's why this QSO was invested in. And from a credit union perspective, the value proposition of working with the Treasury Management QSO is we can help a credit union structure and deliver a treasury management program that's comparable to any big bank for a fraction of the price. It's efficiency. That's the mission of a QSO. And typically we can do so for what it would cost to hire one treasury management professional. We can bring a team of folks that includes sales, service support, product management, and program management, all for less than it costs to hire one person.
Well, that's good. Saving money is great. But these economic times are really moving fast, right? And the challenge is changing. So talk to me about what you're seeing in trends in the credit union movement as far as dealing with this interest rate change and deposit pricing going up.
Yeah, absolutely. So the macroeconomic environment is shifting. When we first started this treasury management QSO, my start date was March 12th of 2020. 2 days later, my wife called me and said, "Hey, honey, they just shut down the kids' schools." And then we got into this environment of starting a business during a pandemic. And the reason I bring that up when you're talking about macroeconomics is it was a really pivotal time for credit unions. The original idea for a treasury management QSO was, hey, we need lower cost of funds. We need high value deposits. Treasury management services is one of the best ways to get really large deposits in just a few deals that have much more net interest margin than consumer deposits. That was the reason. We need deposits. Pandemic happens, Fed drops the rate to zero. There's a flight to safety. The economy's flush with liquidity. All of a sudden, almost overnight, credit unions went from being in deposit hunter mode to, hey, I have too much excess liquidity. The dynamic totally shifted. For the past 2.5, 3 years almost, credit unions have been really focused on non-interest income. And in fact, when it comes to deposits, at least just until very recently, we were asked, how can we get these deposits off balance sheet? They're really throwing off our loan to share ratio. Now, fast forward to current times, inflation's happening. There's a tightening of liquidity. Fed is increasing the rate again. And what we're seeing is there's a pivot where credit unions are now starting to pivot from, hey, we need more non-interest income to we need deposits. We need low-cost source of funds to fund the loans that we're putting out the door. So we're starting to see the economics in the treasury management industry move back from this environment where it was all about non-interest income and get too much liquidity to now there's not enough liquidity. We need to compete for deposits and get them. And again, this is one of the things that I absolutely love about the industry we're in is that there's so many levers that can be pulled by a credit union if they have a good treasury management program to adapt to the macroeconomic environment that can service their members and really help the overall balance sheet of the credit union.
All right, so let's dig into that. I heard you talk that it's mostly focused on large commercial deposits. So give me an example of how that might work, please.
Not necessarily. Treasury management applies from micro business, sole proprietors, all the way up to corporate banks. The services and how those services are used are obviously very, very different, but the value a credit union gets from a good treasury management program is really three things. First, they have more levers. I was just kind of describing this, more levers to manage their business. Hey, we need a lower cost of funds. Let's look at the rate strategy. Let's look at the acquisition strategy. If a credit union has account analysis, you can look at the earnings credit strategy. Oh, wait, we need non-interest income. Well, guess what? Treasury management is one of the best ways to get that non-interest income. You can literally pull those levers. So one, more levers to manage the business. Secondly, relationship. So credit unions, they have relationships with businesses. Treasury management offers the opportunity to, first off, deepen those relationships. Secondly, make them more sticky. And third, have a greater wallet share of that business. Because without treasury management program, a credit union might provide a business a loan, but they're not getting that non-interest income and they're not getting that lower cost of funds from deposits. And finally, and probably most importantly, or just as importantly, is the opportunity for more deal structures. So if a credit union is competing against the bank to win an operating relationship of a business, let's say the loan, the credit, and also the treasury management side, the returns, if they can win C&I loans are much better than CRE. Credit unions have mainly been doing CRE lending because they don't have the Treasury business, but Treasury gives them the opportunity to do different type of lending. And it also allows them to structure the deal differently too. So if a prospect is really rate sensitive on their credit, you can price it into the Treasury management side of the business. If they're really fee sensitive, you can price it into the credit side of the business. And overall, that credit union will just have more swings at bat. So Treasury management tends to be talked about, back to your question, talked about for large corporate customers, because most folks think of, hey, corporate treasurer, payables department, receivables department. But a good Treasury program actually services the full breadth of commercial activity.
Yeah, now so you're talking about relationship pricing, where maybe you're pricing the deposits in a different way than you're pricing the loan in order to meet your overall metrics. So is Tru Treasury helping figure that out on the loan side as well, or just on the Treasury side?
We do it on the relationship pricing. So our specialty is Treasury management services. What we do is we really offer 4 capabilities for credit unions. The first is Treasury programmatic capabilities, where we help structure a Treasury program. And that's in doing that advisory is where we help structure deposits, a rates strategy, what we call a relationship pricing strategy. And we set up the processes and procedures to execute a good Treasury program. But then we also help support and execute that program with Treasury management consultants. Banks might refer to them as Treasury management officers or Treasury sales officers. We provide experience. Most of them have over 15 years experience and they're certified Treasury professionals. But we also provide the back office support too, to manage the various setups of those Treasury management products. Each Treasury deal is literally custom to the business, every single one of them. So there needs to be the institutional knowledge to manage them. And then, of course, we provide the product as well. Back to your loan question, how Treasury management comes into play is if there's an opportunity for credit with Treasury management services, you can oftentimes make a case, if you're talking with your credit committee, to lower the risk by saying, hey, we'll bring in their deposits, make deposits a requirement of this loan. We can have their Treasury operating services. And we look at the overall relationship profitability rather than just the loan profitability or some service or fee profitability. We encourage our clients, and we actually have proprietary tools to do this, price the whole relationship. Look at the whole spectrum end to end. So a credit union can say, hey, we want to set specific hurdle rates. How we get to those hurdle rates in a relationship has flexibility. And that's what we're here to do, to help credit unions intelligently do that. And frankly, win business profitably.
Are the credit unions that you are starting to work with that are, I assume, that are outside of your current QSO structure, are they mostly credit unions that are just starting to operate in the Treasury management area and commercial activities? Or are they credit unions that are moving over from the big banks to a credit union service organization?
Yeah, that's a really good question. And actually one that when I started this organization, I was a little biased towards. So my assumption was $1 billion plus credit unions would be the only ones interested in this. They already have large commercial lending portfolios and really want to move upstream in the complexity of deals. But what we found is, yes, that is true, absolutely true. But also there's much smaller credit unions under that mark. In fact, one of our clients is a $150 million credit union that just realized, hey, we need business services to serve. They had over-indexed in contractors in their communities. We can service the mom and pop shops, Main Street America, if we have business services. In those cases, we can actually help structure and deliver in a business case that makes a lot of sense for a credit union, a full business services program. The other end of the spectrum, with large credit unions, we can bring that sophistication that banks have to structure Treasury deals and help win that business that a large credit union has access to in their community. So really, we run the spectrum of credit unions that serve us. And this is actually one of my favorite and most encouraging signs since we've started this QSO, is we've done very little marketing, very little. We have a website set up, and I will tell you, most of our leads are coming across the country through our website saying, hey, we need help in the Treasury management area. Let's set up some time to talk. It's really underscored this need, this untapped demand to have comprehensive Treasury management services by credit unions to, frankly, deliver the businesses in their community just as a good financial provider. And the real winner of this, the real winner of the credit union QSO relationship for treasury management are the businesses and the communities. It gives them another option. For too long, banks have been the only options. Now credit unions can open their doors to business, say, hey, we're open to business. And not only can we serve you and provide you the same products your banks provide you, but we can probably do it better.
Are the commercial customers that are most ideal for this services are those that have a lot of transaction volume or very large securitized loans? Like, what do they look like?
Right now, the credit union primarily serves micro, small businesses. And our services, we can arm credit unions with services to provide Main Street America. That is by far the majority of the volume. Part of the reason for that, well, there's a few reasons for it. I think in the commercial segment, businesses just aren't aware that their credit unions can service their needs. So there's really some messaging that needs to happen to more complex businesses. But where there's really enhanced earning opportunities for credit unions and relationship opportunities is when you start to move upstream, working with business banking, emerging commercial clients. We typically wouldn't go into the corporate client segment, which is 300 million plus in revenue. But anything below that, we can offer credit union services that they can service those customers in a way that they would expect to be serviced by a bank, usually at a better price and usually with a tighter relationship.
Circling back to commercial deposits, and I think one of your statements that the commercial deposits may be more valuable to the credit union than retail deposits. Walk me through that, please.
Yeah, so there's a few ways that commercial deposits actually create more value for credit unions than consumer deposits. And the first most tangible way is you don't need to pay as much rate on commercial deposits as you do consumer deposits. So that's number one. In most cases, you don't need to pay any rate, especially on small business commercial deposits. As you start to move up the complexity, there's what's called analyzed checking that has an earnings credit rate or ECR associated with it, which is an imputed interest rate that offsets treasury fees. In this case, what it does is it offsets those treasury fees, so you capture deposits, but you're not paying hard interest that you might normally be required to pay on those high deposits. So again, the net interest margin on those deposits is much higher. So that's one way, is just the net interest margin. Secondly, if you're doing a deal, instead of getting the volume of many, many, many consumer deposits, if you win, let's say a municipality or a commercial business, you're going to get $2, $3, $4, $5, $10 million deposit in one deal. How many consumer deposits would it take to get that number of deposits? So again, there's an opportunity to capture large deposits. And then finally, businesses pay for their deposits. In the consumer world, typically deposits are free or there's very low cost with them. Businesses are used to paying for services and deposits. Item counts, monthly maintenance fees, all of that is hard fee revenue producing activity. And that's another way that business deposits add more value, is that they have the fee income, which for analyzed accounts can be offset with an earnings credit. But for most credit unions, after a certain number of transactions, just in a package account, they're earning 50 cents a transaction.
The business services officers in credit unions may not have the sophistication that the business service officers have in some of the large commercial banks. So how do you enhance that ability of that officer?
Yeah, that's the main reason we exist. So let's take a step back and look at how commercial banks operate. There's typically a relationship manager. They're the banker. They're the banker that has a relationship with the business. When that business has a credit need, that relationship manager pulls in the credit officer and says, hey, we need to work on a line of credit, whatever. When that business has a banking need, any other banking need that's not credit, they pull in a treasury management officer. They have an assigned treasury management officer, and they typically, between the credit officer, treasury management officer, and relationship manager, they service that business as a team. Now, in the credit union space, the bankers that have been hired to be credit officers. In fact, credit unions call them commercial loan officers. I mean, that's their title, but they are more than that. They tend to be the relationship manager or the everything officers, I like to call it. Why Tru Treasury exists is we can supply them with certified treasury professionals to be their treasury management officer outsourced. We help them win deals. That is how we help credit unions. In fact, I think that's our greatest value prop. Yeah, we bring products, we bring processes, disclosures, the whole deal. Our greatest value prop that we can bring is our treasury management officers, we call them treasury consultants, that can work directly with that commercial loan officer or relationship manager to win deals. And member, by the way, they work with the member. And how those deals are won is the standard treasury management selling process. Hey, member, partnering with the relationship manager, give me 3 months of your deposit statements. Let us do an analysis. And this is the best part about treasury sales. It's not pushing product, but it's how can we help you save money? How can we help you increase efficiency of your cash management systems? And how can we solve for pain points that you're currently experiencing and automate systems? That's the sales process. So it's literally helping somebody save money and enhance the automation of their business. And just by doing that, we can help win the loan deal, and we can help that credit union realize the full value of that operating relationship. Everybody wins.
So the Tru Treasury person becomes the treasury management associate that was inside the bank. So you actually put someone on the call with the member and the business services officer to work together as a team to solve that commercial business's need.
Yeah, that's right. In a lot of cases. Now, I got to say, we do have clients that actually have business service folks whose job it is to do that, but we'll support them as back office. We'll support them in training. At Tru Treasury, we have tools that can help with modeling the right treasury management deal. It issues pro formas. It has relationship pricing modules in there. So we provide, if we're not engaging the member directly, we provide the tools and the strategy where a credit union can win in the treasury management business.
With the pace of interest rate change, I'm imagining that credit unions may be hesitant to raise their deposit rates particularly quickly because that increased cost of funds makes it harder to operate. But with the treasury markets are instant, right? They're instantly moving. So is there a situation today with the 10-year treasury back above 3% where the commercial deposits are going to be earning a higher rate than your retail deposits? Maybe a lot higher.
Not likely. And I'll tell you why. So commercial deposits right now, there's a lot of ways to set them up. There's what are called zero balance accounts. There's sweep accounts. There's analyzed checking. So it all depends on what a business's needs are, what their transaction volumes look like. The reason why I say commercial deposit rate won't go up beyond commercial paper is because there's sweep product. So there's an overnight sweep that Tru Treasury can offer against repos where if a business has excess liquidity, and we say not on their operating liquidity, but their excess liquidity, it can sweep overnight into a repo product, earn that enhanced rate. And the beauty of that is the credit union still owns that full relationship. They still have the value of those deposits because it's just an overnight sweep, and they're earning fees from our sweep provider. So it's really a nice win value proposition for the business and for the credit union. Now, it all depends on rate strategy. So we're in this time right now, we're at the highest rate in almost 15 years since 2008. Credit unions need to dust off their rate strategy, and probably most of them don't even have commercial rate strategy. Again, this is where we help. We're saying, hey, let's take a look at deposit rates. Let's make sure that you're pricing it for optimal net interest margin, but still achieving your deposit end needs. So there is a whole strategy around how that's done. There is a lot of liquidity products. I just named off a few of them between ZBA sweep, analysis checking, regular business checking, internal sweep. There's a whole variety of products that a business can be set up with where we can help them optimize their cash, their return on cash, but also help that credit union at the same rate optimize their net interest margin or what they're earning on those deposits, the cost of funds, which is usually how credit unions look at it, whereas banks look at it as funds transfer pricing.
So if you could kind of boil this down to what credit union situation would be most impacted by engaging with Tru Treasury and starting to act on some of these opportunities?
Yeah, I would say is credit unions that already have commercial lenders in a commercial loan portfolio with limited to few treasury management products. There's a whole half of the wallet, what I call untapped opportunity sitting in their current portfolio and the relationships they have. There was a credit union that we talked to recently that actually conducted a focus group with some of their current business members or members that on the consumer side that they knew owned businesses. In this focus group, what was fleshed out is that in most cases, these businesses came to the credit union because they wanted to transfer their business deposits there, but the credit union didn't have the capabilities to serve them or the front line didn't know they did and sent them somewhere else. So those deposits, which should be sitting at the credit union, and the fee income are sitting in a bank or with some third-party fintech right now. The member's overpaying. The credit union doesn't realize the value of that relationship. And that's where we make our biggest difference. That's how we can most help credit unions.
Perfect. Nice and clear and concise. Well, thank you very much for your service to the credit union movement, for your information to our listeners. Any final thoughts for the leaders of the credit union movement on ways to connect with Tru Treasury and to better serve the membership?
Yeah. Hey, well, Doug, first off, I appreciate your time today. And for your listeners, if you want to learn more, please feel free to reach out to me or my team. You can do it through trutreasury.com, and that's true without an E. So it's TRU treasury.com. You can email me at john.ballantyne@trutreasury.com, and let's set up some time to talk. This is something that myself and my team are passionate about. We will talk about the needs of your credit union and see if there's anything we can do to help.
Very good. Thanks so much.
Hey, Doug. Thank you.
That's all the insider credit union knowledge we have for this episode. Are you enjoying the conversation? Be sure to subscribe and share your thoughts with other credit union leaders by leaving us a review. See you next time on See You on the Show.
The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual security. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Economic forecasts set forth may not develop as predicted. All performance referenced is historical and is no guarantee of future results. Indexes are unmanaged and cannot be invested into directly.